The stock market gives you thrills that no amusement park can match. And the new roller coaster ride that traders are on right now? Yes Bank's share price rose over 27% in 4 days before falling to 5% on December the 14th. So, what's going on? Welcome back to Revolution Read On, a daily podcast where we break down one story from the world of business and finance. Click on the subscribe button to never miss an update from us. Here's your story for today. Yes Bank's rally is nothing new. Its share price is up 62% this year thanks to number 1, high profits. Q1 profit rose 50% YOY. Number 2, high loans. Loans rose 11.6% in Q2. Number 3, high deposits. Deposits rose 18.3% in Q1. And finally, low NPAs, down to 12.89% from 13.4% in the previous quarter. But the share price had been growing slowly and steadily so far. Yes Bank is one of the 4 banks launching the new e-rupee, India's very own CBDC. This has created a lot of hype around the bank. In fact, some customers are opening accounts with Yes Bank just to try out the new e-rupee. Yes Bank is selling 48,000 crore rupees worth of bad loans to an asset reconstruction company, JC Flowers. This will help the bank recover 11,183 crore rupees and also bring the bank's NPA ratio to around 10%. Yes Bank is also going to get a lot of money soon. You see, not one but 2 private equity funds, Carlyle Group and Verventa Group Limited, are investing a total of 8,896 crore rupees in Yes Bank for a 9.99% stake. Now, all was well for Yes Bank, no? Then why did it fall flat? Blame it on profit booking. You see, anytime a share is rallying insanely, some people will sell off their holdings to gain short-term profits. But there's more than meets the eye. Let's look back at 2020. Since 2016, Yes Bank's NPA had been rising because it had given major loans to fraud companies like DHFL and others. And by 2020, the RBI had had enough. So it took over Yes Bank's board, appointed new directors, and asked SBI to bring it back from the edge of death. Now, the task was too big for SBI alone. So, several other private banks came together to pitch in and rescue Yes Bank. They bought shares of the bank to infuse some money in its books. And a major portion of these shares have been locked in for almost 3 years now. You see, RBI didn't want these banks or other investors to suddenly get cold feet and sell Yes Bank's shares. Selling a huge chunk of shares would create problems for RBI and SBI that were trying to revive the bank. Now, the 3-year period is going to end in March 2023, and many of these banks could finally cash out. This could tank Yes Bank's stock price. So many investors do not want to wait for that day and want to cash out now when share prices are still high. But these banks may not cash out now. Why do investors think they will? Because even after record performance, Yes Bank's profits fell in Q2. And with a recession likely, banks in general could be in for a hard time. However, with new capital infusion and bad loans taken care of, the bank could grow at a much faster pace now. What do you think? Which way will Yes Bank go now? And for now, it's a wrap. Thank you for listening to this episode. We'll be back with more tomorrow. Until then, read on.